Right, it is at the moment we're getting towards that finish line. We're in this build-up right now. So, overall in the commodities complex, how are things really at the moment faring in your view, and why?
Well, there's a great good morning, Rashad. There's a great deal of nervousness, as we've seen in the volatility in the precious metals and energy complex, and to a certain extent industrial metals, over the last few days. How we expect things to evolve, largely in the event of a Brexit, the channels of influence extend right across the asset class, principally through increased safe haven demand for metals like gold, a rising dollar, which will depress the industrial metal complex chiefly, and specifically those metals within that sector most vulnerable to the dollar, metals like copper. And then, of course, a general wave of risk aversion, which will impact, of course, oil being one of the most speculated commodities, right across everything. There will also be some weakness in emerging market currencies, specifically the producer commodity currencies, which act to lower the cost of production of many of these commodities, and in terms of agriculture, stimulate exports as well. So a wide range of potential impacts.
Well, absolutely, Mark. And the thing is, we've got, of course, different scenarios for if the UK decides to stay and if they decide to leave. I'm guessing that the balance is going to be on the, when you are looking at risk, is, of course, if they decide to leave. Now, what would be the immediate consequences? And do you think, of course, there will be a lot of knee-jerk reaction to this, which might lead to things perhaps going down too far too fast?
Yes, I think the most immediate reaction will be in gold. We expect gold to jump 10% in the event of a Brexit. We expect volatility in gold to increase significantly. And this can be played out in terms of, from an investor perspective, through accessing instruments like variance swaps that increase in value as volatility increases. And, of course, capturing the move in gold can be played out in any one of the long instruments around the world as well. Secondary to that, you're going to have a knee-jerk reaction, I think, immediately. We expect metals to move down by about 5%, principally copper. We expect oil to move down 5%. And the best way of playing oil